I know people are going to get mad at me for saying this. Here's two sleeper states that everybody should take a look at right now: South Carolina and Mississippi. You don't hear much about them, but I'm telling you, there's deals down there. The values are there. The laws are very pro owner, and it's got a long ways to go before it becomes saturated. So
welcome to the Real Estate Reserve podcast. I'm Jason Balen from Hard Money Bankers, and this is Ian Horowitz from Equity Warehouse. If this is your first time tuning in, welcome. Promise you will have a lot of fun with us over the next 30 minutes or so. You'll probably learn something too. You know, we focus this show on real estate investing, marketing, business, personal finance, and things like that, and we have a heck of a lot of fun doing it. If you're a repeat follower, viewer, watcher, listener, thank you so much. We appreciate all the support, and we'll continue to provide the best value we can to all of our loyal followers. We certainly appreciate it.
Yeah, man. I'm excited to do this show. I know you just got back from Florida when we're recording this, so hopefully you got a nice little sun while you're down there, Jay. But before we bring in Gary, guys, if you get any value out of the show, the best thing you can do as a compliment to us is to either leave a review, but more importantly, share it with your friends. If you get something from this, please share it. This is how we spread the knowledge. It's the same way we learn. We talk to all the podcast guests and we learn information. This is our network of people that we talk to and work with on a daily basis. And we're always learning from them. They're sharing their knowledge. And hopefully if you got something from this, you can share the knowledge from here with everyone else. So enough about us. Why don't we bring Gary in and Gary Wilson? And Gary, what's up, brother?
good to see you guys. Appreciate you having me on, and I'm going to bring the fire for your folks here. So I'm looking forward to it.
Well, we appreciate that because it's cold around here on the East Coast. But Gary, you want to tell everybody where you are and or where you're from and what you do?
Sure. Well, right now I'm in rural Virginia, way out in Shenandoah, in the middle of the mountains. It's beautiful country. But where I spend my time mostly here in Virginia, the mountains end of the beach, Virginia Beach, up in Pennsylvania around Pittsburgh and Beaver, and then down in Florida on the Gulf Coast, sort of between Fort Myers and the Tampa-St. Pete area. Those are the three areas where I hang out. Depends on wherever the weather's the best, So,
chasing that 70 degrees. Good for you.
Yep. So
no doubt. So let's jump in, let's just fly right into all this stuff. I know you've got kind of a lot of experience and a lot of different things related to real estate investing in general, related to multifamily as an asset class. You were mentioned something related to, structuring and building a team related to multifamily. And I think, the trigger for me was doing that, even if it's not in one of your home markets. And I think that's always a challenging part for real estate investors, especially if they're on like the East Coast, if they're in Washington, D.C., where I am, Philadelphia, or New York, some of these property values are so expensive and the numbers just don't work. So real estate investors want to buy houses, single family houses or multifamily properties out of state. And I think the biggest thing they're scared about is, well, how do I grow a team? How do I do this? I'm just a one-man person, or it's me and my business partner. I might not even know the areas. So maybe let's go through maybe some recommendations of kind of how you get started on something like that.
Sure. Well, just a little background so it makes sense is I started investing in January '86 in Tidewater, Virginia. My first house was in Virginia Beach. And get this, it was a 4-bedroom, 2-bathroom ranch, like 5 minutes from the ocean. And I bought it with my college roommates named Socrates. And we paid $63,000 for that house. Today, my car is worth more than costs more than that house. But the same house is probably $600,000. So, in any case, his father was an investor in Richmond, bought a lot of multifamilies, and he showed us how to structure that deal. And then from there, we kept buying, duplexes and so forth. But in 2002, I got my real estate license, really out of frustration. The most agents were not trained to work with investors. They're not taught about investing. And I realized that. So I thought I'll just get my license and solve that problem. And one thing led to another. I found myself teaching other people how to invest who became my clients. And I turned that into a brokerage company. And that's when really things really took off. So we were serving people from all over the US and Canada and even like 13 other countries. And they were targeting Pittsburgh mainly during the big recession years because the values were so much lower than, like you said, New York, DC, Philly. They were just lower priced properties, but the rents, the income relative to the value was much higher. We had a much higher cap rate, right? So, in any case, that's when I realized a lot of investors are not just investing in their hometown like I was; they're investing all over. So I built a brokerage company, and we were working with all these people from all over the place. And then I started teaching agents. I did a merger. I merged my brokers with a big box company because I didn't want to be in Pittsburgh anymore. I need to be near the sun, right? So, um, but that company had me train their agents how to work with investors all over the U.S. and Canada. And ultimately, I wanted to get back in production because I missed the thrill of the hunt. I decided I'm going to build a team, but I knew instinctively because we have a lot of tools we use on our team to track the migration of people and more importantly the migration of money, so we can see where money's leaving and where money's going to at the state level and the county level. And at the county level, it's even between states. Like I can see people moving money from Cook County, Illinois, which is Chicago, down to Tampa, St. Pete, Florida, and I can see it down to the dollar, and it's real time. You're watching this thing go up and down. It's crazy. So I did some more digging and realized more than half of the investor transactions were out of state. In other words, somebody living in Pittsburgh isn't just investing in Pittsburgh; they're also investing more than half the time in other places. So in any case, we just perfected that. We built this team. We got agents in 38 states. We use tools that allow us to know, what's happening demographically, sociographically, economically, in every area, down to the neighborhood level. We can track this stuff. So now we know exactly where to place our investing dollars, either ours, most of our guys invest too, but also our clients. And it's made a world of difference. It's so much easier today than it was 22 years ago when I first got my license. I mean, the data is so much more available. The technology is so much more advanced. And when you have a team of people in all those locations using the same tools and strategies, it's like you speak the same language. So investors have a greater sense of comfort. They know it's just like going to a Marriott hotel. It doesn't matter what city you go to, you know what to expect. You know you're going to get quality service and good arrangement. So we actually took that model and applied it to a real estate team that serves investors. And it was a risk. We didn't know it was going to work, but it really worked. I mean, it's still growing. I mean, I'm on podcast almost every day now. It's just crazy. But the thing is, the bottom line is, for investors who are listening to this, one of the biggest challenges is who's going to do my work, who's going to remodel, who's going to handle maintenance and repairs, who's going to handle vacancies and collecting rents and all that. Well, we have all those people in all those locations. We have that local presence. We just run it on a national scale. I don't know if that makes sense, but it's like we're still there in the Baltimore community, in Philadelphia, in Richmond, in Charlotte. We have people there, and we know who the great service providers are: the attorneys, the lenders, the contractors, the inspectors, the appraisers, and all that. We've got it drilled down pretty tight. It's there's a lot of benefits we didn't anticipate, but that's one of the biggies I want to let people know, that it doesn't have to be a scary idea to invest out of state anymore. You can do it with successfully and with a sense of confidence.
Yeah, it's an interesting idea, especially in the single family space. It's definitely changed as more institutional buyers have chased it. Where are you guys getting your buyer base that are chasing single family houses out of state? Like, why would someone choose to invest out of state from, say, their hometown, and how are you attracting those buyers?
Yeah, excellent question. So a couple things. If you look at legislation and policy that's coming out from the federal level, state level, and local level, it gives you a lot of insight on what's happening. So, for example, in the Bay Area of California, they have a program now where they're going after builders and investors to either build new properties or remodel old properties to be used for affordable housing, because right now the big need in our country all over is housing. We're about almost 7 million units short, and most of it's affordable housing. So, in any case, the catch is in that part of California is you can't decline somebody for financial reasons. Well, we all know as investors, that's the only reason we can decline somebody is for financial reasons. They want to take that away. So what I'm getting is I'm not knocking California. It's a beautiful state. I got friends and family there. But the reality is not only are people leaving California because the taxes are too high, they're too tough on local small businesses, but more importantly, the landlord-tenant law is very pro-tenant and not very pro-owner. So California right now is one of the states we're seeing more people invest out of state. They're actually going up into Oregon and Washington, and they're also going over to Nevada and Arizona and Texas. But really, we're seeing Californians invest with us in Florida in a big number, big numbers. Tennessee, right? So we get a lot of people from California, a lot of people from New York, a lot of the northeastern states going from, say, Massachusetts over to Illinois. A lot of those folks, Michigan, Indiana, Ohio, they're all coming down to, I'll just name them. Tennessee's a biggie right now. North Carolina, Georgia, and believe it or not, Alabama, South Carolina, and Mississippi. So this is, I know people are going to get mad at me for saying this. Here's two sleeper states that everybody should take a look at right now: South Carolina and Mississippi. You don't hear much about them, but I'm telling you, there's deals down there. The values are there. The laws are very pro-owner, and it's got a long ways to go before it becomes saturated. So that's what we're telling our folks. So, but we're getting those people again from mainly the northern and northeastern states and out west, and also Canada. We get a lot of investors coming down from Quebec province and Ontario province. Lots of them, you know.
And is this focused on multifamily, or is this all residential, or is this also type of commercial stuff?
Yeah, all types. It really is. The vast majority of it is definitely residential. It's the greatest need, so rental rates are going up. And when you start moving people down in droves like that, it creates more demand on the residential units. So sales values are still going up as well as the rents. I want to mention one more thing I forgot earlier. So one of the ways we attract the people that we know are coming down, like to Florida and South Carolina and Georgia, is we can see where the money's coming from. We have a website we use, and we can go to Pinellas County in Florida, where St. Pete is and all that, and we can see the money coming down from Cook County, Illinois, which is Chicago. So we'll do marketing, social media marketing in Cook County, and we'll showcase properties in Pinellas County, Florida. So we're marketing to the people where we know the money's coming from, showing them properties that have recently sold in the areas where we know they're already investing. And it's literally like you're instead of casting a wide net. You ever seen people net fish? They cast a net and they pull up a toilet lid and a tin can and a boot and a tire and a crab. But then the other guy's going on in a charter boat with 6 other guys with high-tech gear in their right rod and the reel and the bait and the hook and the line, and they're specifically catching the blues or specifically catching swordfish. That's really what we're doing, is we're getting very highly focused and targeted and specific. And investors like that stuff. It's more business-like. The average agent doesn't do these things. They're just casting a wide net. And investors don't like that. We want specific, targeted. We know what's going to happen, and we know we can project our income and our expense down to the penny, and that's what they want. That's what we want as investors, you know?
Yeah, I think that's the problem in the agent space. I know when we were doing a lot of single family, it was like every agent wanted to rep us. And I'm like, well, I don't really need you to rep me because I can find deals without you. And then the deals that they bring you, the agents don't understand the investment side. They don't understand that you need to make a profit. They don't understand. No, maybe they don't understand it. They don't understand what it takes to make a profit.
Yes.
They don't understand what the returns on rental rates and all those other things need to look like. How do you train your agents to think like investors? Are they mostly investors, or do you do training with them so they can understand this to provide a better product?
We do. So we do have we have people like me on my team that were investors first before we ever got into the broker space. But we are now attracting, since we started this, it's like we invented pizza or something. So now we're attracting a lot of agents. In fact, I have agents applying to be on the team every day now that are new to the business or new to investing. So we actually do train them. All the training I did with investors all the years, we use the same training to teach our investors, the methodologies, the terminologies. We do case studies, we drill them, and we always celebrate success. So we close deals every day. Well, we celebrate that. We put it out there for everybody to see, and we always talk about the deals. And we also have guest speakers. I have a Monday at 7 Eastern, and we invite people to come on who are in the investor space, who are experts at syndicating or raising private money, or they just have a niche that they're really good at, like mobile home parks or storage. So we have them come on and teach. And we have such a good crowd. They teach for free. We get them they teach for free for us. But more importantly, we do attract a lot of investors, and we actually teach our investors too. Some of them don't need it, but one of the value propositions is, look, we can help you make money in real estate investing, but we want to teach you first. So really what we're doing, guys, is we're leading with education. This sounds crazy because we're in brokerage and we're in investing. Our model is not a sales-based model. Our model is an education-based model. And we certainly make a profit. We sell a lot of properties all over the country, but because we lead with education, we attract a more high-minded investors who really do want to learn correctly and not just gamble and say, here, we've had investors tell us, just go find me a good deal. Here, this is what I got. Go find me a good deal. And I always tell them, I say, look, not only is that risky for you, that's risky for me. I'd rather you be an informed, educated investor making good decisions, so we now have a long-term relationship instead of you just throwing money out there and not knowing what you're doing. That's a risky proposition. I'd rather have educated consumers. So that's why we do so well, is because we lead with education. That's really the answer,
And is most of the education, is it a full gamut of everything, from start to finish, start being like, hey, figure out what resources and what you have available, or actually even before that, what your goals are down the road, like what are you trying to accomplish out of this, to finding deals, finding capital, structuring, things like that. I mean, is the whole gamut of everything.
Yeah, we cover all that. Now, what's interesting is we break it down into components. Like when we have an investor approach us who wants us to help them, we first interview them to find out what is it they really want to do, because they're all going to say the same thing. I'll say, what is it you want? Well, I want to make money, and I want to be rich, and so understand that that's an outcome, but the way you get there is going to be through certain strategies. You're either going to flip homes, you're going to buy and hold rentals, you're going to wholesale, you're going to do syndications where you bring in partners. You could even do different exit strategies on your rentals. You could do short-term, mid-term, long-term. So we want to find out their what we call their equation. Are they more time motivated or money motivated? Because some people already have a lot of money. They just don't want to work anymore. They want time, and they realize that real estate investing is a way to do it. So I tell them, well, you should probably buy and hold long term. Look at what's happened in real estate values just in our lifetime. It's crazy. I don't know. I'm in the stock market, but I'm way more in real estate than the stock market. So in any case, we interview them first, find out what really is their core driver. Now, some people truly are balanced. They do some flips, they do rentals, they do, strip malls and storage and so forth. But it all starts with the interview, and then we focus in on the outcome. Then we know what strategies to use. Now, ultimately, no matter what path they take, whether it's flipping or renting or wholesaling, whatever, we have a commercial training program we developed with the number one commercial broker in the entire country several years ago. His name's Robert Creamer, and he and I were friends, and we were mastermind members. So we co-developed that, but we don't give that to people right out of the gate. We make sure they learn the fundamentals first, and then when they show a propensity to think big and grow big and go big, then we'll let them do the commercial work, because we do commercial jobs that are, in the low millions up to 800 million. We've had listings as high as $800 million. Most of them in the $1 to $5 million range. and then we get an occasional $10 million or $20 million deal too. But ultimately, it's more structured. It's not just throw money and see who sticks. And the old model of doing that was people pay you $50,000 to train them. Whether they produce or not, you have their money. We don't do that. We don't get paid until they produce. That's how we do it. That's what I mean by leading with education. We train them, we help them invest, and when they succeed, that's how we get paid. That's a much smarter model, for consumers.
Yeah, I think that's everything in every part of business. I know, like when I jumped on your podcast, any podcast I ever jump on, oh, what are you selling? Oh, I'm not selling anything. I'm just here to educate and get people over the hump, take them down the road, right? Because if you believe in what you're doing, like the same way Jason's business model or my business model or your business model, you're creating a cash flow machine. And if you can figure that out, then it's like, okay, well, now I got additional dividends or cash to go invest into new deals and break new markets and break new things. And I think it's really smart what you've done and how you've been able to help people and truly get agents to think like investors. And, actually, when I was on your podcast, it was funny. I was talking about it. It's like, agents, you guys have it all. You have it all right here. You have all the data. You have all the information. You have all the lenders. You have all the title companies. You have all the buyers. You have it all. Why aren't more agents investors? And it's crazy to me. I still don't know that we don't have the answer to that.
I got the answer. I got the answer to it.
I
do, and it's not an insult to them. And I was an agent at one point, but this is my opinion on it, for what it's worth. And I think a lot of the agents, it's up here, and they don't challenge themselves. They don't look outside the box enough, because a lot of agents are I personality types. They're good salespeople, and that's the only quadrant that they ever think about is that side. They think as salespeople, they think as transactional people, and they don't think as investors, and they don't think outside the box. And I'm not saying that's the case for all of them. Obviously, there's a lot of agents that are extremely successful on all sides. This has nothing to do with one-off folks, but as a whole, a lot of them are very good at the transactional side of it, the sales side of it, and they're super focused on that. And that's just the one side there, right? It's just like a surgeon's very good at being a surgeon, but they're not very good at personal finance. They're not well-rounded enough. And I think a lot of that can be changed if that's what they want to do. And I think, they, like you said, Ian, is like, if they want to diversify into a lot of different things, they have the upper hand. They can do so. They may not want to do so. And if they don't want to, that's fine. But the ones that do want to are the ones that are complaining of, hey, I really wish I could, do what you did, Ian. I really wish I could do what you did, Gary, and I could buy all these things and not just sell. I'd be a lot better off. And it's like, well, you can. You just got to think outside your box a little bit. And a lot of them don't.
Yeah, well, and it require them to sell the range. It's funny. We attended here where our office is. It's a golf studio, and I walked over one day and I saw a Range Rover out front, and I walked in and I said, he introduces the guy. I said, let me guess, you're a realtor. He's like, how'd you know? I said, well, I could judge by the car in about 2 seconds that I know you're a realtor. But then the funny story, just like Jason said, is like 2 weeks, 3 weeks after we became friendly, maybe it's a month later, he's like, hey man, like, I want to invest like you. Like, how are you able to do it? I said, well, in case you haven't noticed in the parking lot, I don't have a Range Rover. You know what I mean? Like, every additional cash dollar that I get goes back into deals. And, much like I'm passionate about first responders, you're passionate about agents, getting them to think and actually build wealth and not just be a sales rep for the rest of their lives.
Yeah, exactly. I think that's a hard trap for a lot of folks. And, early on in our career, we raised large sums of capital to lend, to put into our hard money lending company. And, this is sad, but true. We learned a lot of stuff related to dispersonality types and I personalities, and the heavy I's were never good, or the high I personality types were never good to raise capital from, not because they weren't good at making money, but they had a hard time with having this disposable capital. What's the right term I'm thinking of? Investable capital. They always had a hard time with investable capital because they made a ton of money and then they would spend it, and they wouldn't think of it as and they wouldn't invest it. So they just didn't have lots of investable capital to do so. And again, not being mean or crude to this is just what we've seen firsthand. And let's be honest, what dispersonality types are. You can have multiple. You don't just have one, and you can always change by doing so. But so whatever.
All right, I think we beat up.
Yeah.
We beat up on enough real estate agents.
I
This
know.
is me and Jason's favorite topic is beating up on real estate agents sometimes because it's just like you got everything there. So
Well, when they're not investors. I mean, it's like, hey, I'd
They're
rather just
not.
sell this property and not invest in it. And it's like, why? You could do so much more with it in the long run. You're because you're thinking short term, you're not thinking long term. Hey, I can make
Yeah.
10 grand now. Yeah, well, you could also make $100,000, down the road on this thing and have monthly dividends
Yeah.
that come in. Like diversify, do both. I mean, there's a lot of very successful real estate agents that have sold, just from selling. Imagine if they also were investors as well and thinking short term and long term.
Yeah. Well,
Gary,
when I
go ahead.
was in the business in the beginning, when I got my broker's license, I actually still drove a pickup truck. I was a 4-door, 4-wheel drive pickup truck. And when I would go to meet clients, I'd show up in my boots, jeans, and a hoodie because I knew I'm going to be checking this house out with this person and get cobwebs and dirt and stuff like that. And I remember one time I literally strapped an entire kitchen on the back of my truck. And I'm riding down the road like Jed Clampett and the hillbillies, right? And I get to this house and they couldn't believe it. They said, "What is that?" I said, "That's a kitchen." They said, "You mean like a whole kitchen?" I said, "Absolutely, it's an entire kitchen." I just got it at the construction junction for a fraction of what I would have paid new for it. But
That's right.
you have to be the master of delayed gratification. You got to play offense and defense at the same time. You can't just focus on offense. You're always to be chasing a dollar.
Yep, that's 100% right. What about how many transactions do you guys do a year across the 38 states?
I think 800 and something, 859, I think was the last count. So,
Oh,
and we've got the production team, we've got 177 people, but the production team, actual agents in the game is more like 76, 77, probably 76. So we're in probably 50 of the top MSAs and 38 of the states, so we've pretty much got all the bases covered. I love Montana, but we don't have anybody in Montana. It's just the population of Montana is, I think, less than 1 million people. Beautiful place though. I definitely would go visit there if you've never been there. So
yeah, that's definitely on the list. Before we move into the last segment of our show, I know you're an accomplished author. You've written a bunch of books, and it actually pertains to our questions at the end of the show. But out of your 8 books, what's the favorite one that you have written?
Well, it's actually the last one. It's called Global Investor Agent, and the reason it's my favorite is it kind of covers the timeline from start to finish. Literally, how I bought that first house with Socrates, all the way to the team now. But what I really did different, guys, when I was announcing to my team that I was going to write another book, I just had this idea. It was like spur of the moment. I said, "Who would like to write this book with me?" So 8 of my team members each got to write a chapter in the book Global Investor Agent, and it's appealing for investors and it's appealing for agents too. And I hope a lot of investors will get their license as a result of this, because if you get your license as an investor, it gives you more tools you can use and it opens up more doors. You
Right.
don't have to be a regular realtor. I never did the Sunday open house. I don't think I ever did an open house ever. We just don't do it with investing. But in any case, people have told me that book is selling better than the other books too, by the way, which is kind of nice. But they tell me I write like a cowboy. They say I write the way I talk. And I'm thinking, well, that's probably pretty good. Now that we did a voiceover for the audio, it's on Audible too.
Yeah.
And they actually picked somebody who sounds like a cowboy. you know, but the book just really, people have told me they've cried when they read it, like not sad cry, but they can see themselves in it. And it's probably the one that's really closest to my heart, like real. I'm not, and by the way, I'm not one of those writers that just gives you all investing in real estate is tiptoe through the tulips and everybody gets rich and all that. I'm like, they need to hear the real truth, the story, because you're dealing with tenants sometimes. You got to know how to deal with tenants. It's a study in human nature. So I write about that stuff so people have a real honest look at it. That, yeah, I can make a crap load of money, but you know what? There's always a trade-off. There's something you're giving of yourself to make that kind of money. And I always tell people, I don't judge you by how much you make and how much you have. However, how much you make and how much you have is a measurement of how successful you are applying the methods and being disciplined and being a good person when you're dealing with other people. And again, it's a human nature business. Your people have problems, and you got to be able to handle that as a business person and as a compassionate human being. So that all comes out, and that's the I get a lot of feedback because of that.
Yeah, no, that's definitely awesome. And I know when we both wrote our books, people would reach out and say, "Hey, thanks for actually putting it out there." And the fact that you wrote it in cowboy dialect, that means I could probably understand the book. So I don't have any desire to be an agent, but I will definitely listen to it and go check it out.
Well, people want that. People want natural. Down and dirty. Like, they want you to be yourself, and it's whoever you are. You can't change that. It's whoever you are. You don't have to pretend to be somebody else. And I think the fluff of, hey, I'm this, people don't, and what you said earlier, people don't want to be sold either. They want to be educated. And guess what? Education is the best way to sell anyways, because instead of you telling them what to do, they're telling themselves what to do, because they're having that aha moment through the education process of like, wow, this is what I need to be doing. And after they get over that bridge, that aha moment, they're all in, and you were the one to help them. So that goes a long way.
Yeah. So Gary, what we like to ask all of our guests is, what's one book, and I told you it pertained to your book, what's one book or podcast that you're listening to right now, or you've read over time, that you think everybody should go check out?
Oh man, there's so many. I tell you, probably one of the key books is Think and Grow Rich by Napoleon Hill. I've read it multiple times. And what's interesting is like the mastermind part of that. I don't make any decision anymore, guys, unless I talk to at least 3 or 4 or 5 other people that I know and trust in my life. And that mastermind comes from the Bible. I'm not here to preach a sermon, but what's interesting is I never really followed it much till I became an adult. But all the lessons I've learned, you can trace back to those original writings. It's amazing. So that, and then also Robert Kiyosaki, a couple of his books, Rich Dad, Poor Dad, Cash Flow Quadrant. That's definitely one you want to read. I've read tons and tons of. I've literally have over 3,000 books in my library.
Nice.
And I read always 2 at a time.
Yeah, no, it's definitely a good way to get well cultured. And now with audiobooks, that's how we consume a lot of our content. Usually if I get a book that I really like on audio, that's when I go buy the paperback. Although last year I did challenge myself to read a book, and it took me way longer than I wanted, but I did read a book, and it was a good mind space. But it's definitely not for me.
Hey, Ian, here's me reading a book. I have to sit up straight, take notes, or I'll fall asleep. But I do the same thing. Audible and the written book is an awesome way to learn, man. You'll retain so much more,
Yep. That's right. Gary, dude, thank you for all the information. That's awesome. Where's the best place people can find you on the internet, or they want to find a copy of your book, or they want to reach out and talk to you?
Yep. Well, the Global Investor Agent, the book, is on Amazon, and I want to let everybody know we don't actually take a profit from that book. Every dollar we make over and above the Amazon cost goes to the Healing House Foundation. It's a way for us to help people in need of housing all over the country. So that's how they can get the book. Go to Amazon. But if they really want to see what we're all about, just go to it's realestatewithgarywilson.com. And I hate the name of it because I don't like putting my name on. I like things being about other people, not about me. But the Google guru said, you need to do this or you're going to not get the SEO results. So that website shows them all the other books I've written. Some of them we give away for free now because they're part of the called public domain. I've written there's 5 of them on public domain they can get on flipping and rentals and all that, totally free. They can also see we do have training programs, and for the agents, the good thing about the agents, guys, is if you're an agent listening to this, you can get on our team and get all that stuff totally 100% for free. Our lead generation, everything, totally 100% for free, just for being on the team. So the other website, now that one's specifically for agents, that's called globalinvestoragent.com. And so team leaders can look at it, independent brokerages, and really get a feel for how we accomplished what we accomplished in such a short period of time. I mean, anybody can do what I'm doing, guys. I swear I'm just a regular person. I'm not a Harvard graduate. I don't have a doctor's degree. You know, if you're an independent brokerage or a team and you can't get through that first threshold, everybody goes through that. There is a way, and we figured out it's basically comes down to lead with education, but we actually teach that to those people. So they can go to that website and get a call with I'll call her Beverly. She's my right-hand person, and she'll do a quick interview just to see, hey, yes, this is something you should look into, or, you know, probably should stay a regular agent, but she wants to save them time and me time. So it's kind of not harsh, but it's honest is what it is. So I would check that out if I was an agent, because the way the market's going, this is going to be a big part of your business, working with investors, whether you want to or not. So you might as well get prepared now, you know?
Excellent. All right, guys. Gary, thanks again for everything you've shared today. Definitely check out, reach out to Gary today. Definitely some very valuable resources, and obviously has a ton of experience in almost every single state. Thanks again, Gary.
You got it, man. Thanks, guys.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.